The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that gold report. It is fantastic, buddy. I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night. And, of course, we wish all our veterans a great, safe day. And we remember all those veterans that aren't with us right now. I start with the idea that nothing is impossible and everything can be done in the end. Market-wise, let's take a look at it out here. We have the Dow Industrials down 39, NASDAQ off 10, S&P's down 6.5, gold contract down $4.40, traded at $1,084 an ounce. Silver down 8 cents at $14.27 an ounce. Platinum down 18 bucks at $8.82 an ounce. Copper down a half a penny at $2.21 a pound. Light sweet crude off $1.22 at $42.99 a barrel. King dollar down 325 ticks, trading out at 99.06. The euro is up 16 at 107, and the yen's trading 122.88. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look. And what do you have? Can you say ABC down? That's what's happening out here, folks. So, what do you have? Let's check it out. If we take a look at the SPY, what you have in the SPY is this. The high generated in the SPY last week, we got to a price point of 211.66. That was on the 2nd of November. That was going 3rd of November, rather. That was going against the highs that were generated out here this whole past year. We got up there, and we did that with 95 million shares. Weak volume, right? As we roll over, bottom line, you start rolling over. We get some volume going with it. This Monday, what do? We come down, and we come down with 131 million shares. Now, this is what's really cool about this structure right now. So you had divergence yesterday. And what the divergence yesterday was this, folks, is that we're down on Monday, and we do 131 million shares. We go up yesterday, and we do 75 million shares. What do we do today? You get to a higher high. Market's not holding price, but you can have lighter volume. I suspect this is a small ABC structure on the way down. The C point on this is 208.94, and it's a 4.5 point ABC down. That will take you somewhere down around the 205 area. Now, watch the correlation, because this is cool. We go to the NDX 100. We look at the 3 Qs. What do you have with the 3 Qs? 3 Qs go make a new high. The high that it had made, that high was generated on the 3rd and 4th of November. The high was made at 20 million shares and 26 million shares. Bottom line, you were testing 26 million shares, which is anemic volume as it was. That was just July 20th high. What do? We roll over. Now, this is where it gets cool. You roll over on Monday, and on Monday, the Qs do 33 million shares. You go down to 112.86. Yesterday, as the SPY went higher with lighter volume, what do the Qs do? The Qs go lower with higher volume. We do 35 million shares versus the 33. Now, and this is the kicker. Here's the kicker. What do we do today? You go higher, and the volume contracts dramatically. Today, We're at 18 million right now. We'll probably do 20 million. That also is a C point, I expect, of an ABC structure on the way down. Inside the Qs, your A point is 115.47. That was the high generated on the 4th. Your B is down there at 112.63. So you're talking almost 3 points. That'll get you into about the 113.25 level. Now the 113.25 level, sorry about that. No, 111.25 level. And the gap is wide open from the 22nd. I expect what you're going to see is that we're going to go after that gap as the NASDAQ had gapped higher. That's the way that seems to be set up right now. Gold market. Let's go over to take a look at gold. What do we have with gold? Gold's down $4.30. We are trading at a price of $11.84. You've done 151,000 contracts. Now, that's a big number, folks, particularly because it's Veterans Day. Bottom line, the trading markets are open, but there's still a lot of people off. So that is saying gold's going to run down there and try to test, will most likely test the 1079 area. That's how that baby is set up. Now, if we look at the context of equities that are up versus down, and we've been talking about this, quite a bit the last few weeks. This is what you have, okay? And this is just amazing, okay? So you have indices, folks, that are still at highs. We have Intercept Pharmaceutical is down 11%, 22 bucks. You have Chipotle down another 1.5. You have Ralph Lauren down 5.25. You have Credit Acceptance Corporation down 4. Dillard's is down 7.5. United Therapeutics is down 4.5. Macy's is down 14.25%. It's like it's just one after the other, man. I mean, you don't have stocks that are up like that. I can keep going. You got Humana down 2%. Horizon Pharmaceutical is down 20%. If I give you the plus side of this deal, inside the plus side of this deal, you get Canadian Tire up 6%. Boyd Gaming Group is up 4.7. Element Financial is up 7. Bottom line, you can go through just about all of these equities, and what you're going to see is you're going to see the amount of equities that have already fell out of bed. And falling out of bed specifically means that a stock has been higher, has stayed higher. You wake up in the morning, it's down 20 or 30%, and then see ya, don't want to be ya. That, folks, is a market that is going south. That's huge distribution that's happening. And the way that you get gaps lower like that, if we take a look at Priceline went from $1,459 on Friday down to $1,303 on Monday. Bottom line, Priceline's going to make its way down to the bottom of the consolidation, which is somewhere about 900. One of the culprits out here, now this is a small culprit, this has been a small roll, is Apple. The indices themselves are going to have a hard time getting to higher price because Apple gapped lower. Apple is such a large weighting structure inside the Index 100, the S&Ps, and the Dow. That puts huge amounts of pressure on everything else. You stay right there, folks, to come right back. Dow is down 32, Nasdaq's off 8, S&Ps are down 5.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is off 37, Nasdaq's down 7, S&Ps are off 6. If we take a look at the Dow Industrials first, see where the pressure's coming from, folks, what we have is this. Inside the Dow out here today, on the downward side, Walmart. Walmart is trading down 116 at 57.52. Nike is down 244 at 127.56. Merck is down 66 cents at 53.77, and United Health is down 133. Now, if we go back to Walmart, well, just watch this, how this is shaking out. Walmart, you have a holiday trading today. Walmart is down $1.16. That's not a huge deal. Walmart has already come down from $80 to $57 in the past 6 months. Well, 78 to be, yeah, 79.94. Walmart's going after this B point, folks, of an ABC structure on the way down. Now, what you'll also have is this, okay? So Walmart was one of the first retailers off the high. I'm just going to bring this back so you can see, you know, how these setups basically work, number one, but when you have a breakdown, how serious it can get. Now, Walmart, folks, was in a 12-year consolidation. It broke out of that consolidation, and it broke out of that consolidation in May of 2012. It stays above the $70 area. And when you look at this, you're going to see absolutely zero volume. And please go look at Walmart, okay? Because what you'll get out of Walmart is this, is that when you're at highs with hardly any volume, and you stay there, in this case, we stayed there for 2 years, that's pure distribution. You come off those highs, then you have a failure. The failure specifically would be you're accelerating on the way down. That's what it's done. Now what you have is this. Then the news comes out, of course, that first workers want more money at Walmart. Bottom line, what is out here today is their workers want better discounts. They don't get discounts on food, evidently, enough discounts on food, versus how the workers at Target and Whole Foods do. Bottom line is that there's plenty of jobs out here. They got to come up with more bread for their employees. What does that mean? That means less profits. That being said, now I want to show you something, because this is intense. So when this is going on today, the whole retail business, we're going to go through the retail business is getting killed, but Walmart was the first one that came off its highs. Macy's is down 7.5% out here today. But check this out. I just went, if you're in the car, I'm going to explain what we're looking at. I can pull up a button, I can see all the largest positions inside of Walmart. Now, what ends up happening is this, is that if you own more than 5% of a position, you have to claim or put that sell in as soon as you do it. The large banks, many times, will just put the sell in, period. Well, as I'm bringing this up, right before I got on the air, I'm saying to myself, oh, look at here. And what you have is this. There's a slew of sellers, and I've talked many times, depending on how long you've listened to the program. Once Fidelity starts selling, it's trouble in paradise. The reason being is that Fidelity is so huge, okay? So many funds. When that happens, however, what I've seen on a continual basis, if State Street, if MFS own that equity too, they start selling. Well, guess what? State Street, they own 67 million shares of Walmart. They're filing right now. This filing is as of yesterday. So Fidelity has been selling. Fidelity, as of June 30th, they sold 6.7 million. They only had 9.9 left. Well, guess what? This bleeding is going to go on big time, because now what you have is that this looks to me like the first sell for State Street. They're getting out. That's 67 million shares. You turn around, we put Walmart up, and more than likely what you're going to see is that it's going to break the B point with volume. The A point on Walmart is 67.95. The B is 56. So you got another 11 bucks. That gets you down to $49. We're at 57. Well, when you bring this back, the way Walmart is set up is that when you come out of a 12.5-year consolidation, you know, you're going to go back to the bottom, which is 42. But guess what? You can go all the way back to the very bottom where it started from. It's 1150. It's a big number. If we go over to Macy's, we take a look at Macy's. Macy's, folks, great company, right? Bottom line, one-way route. Macy's is down 14.5% today. Macy's, and from July of this year, $73 to 40 bucks. And Macy's is not stopping on the way down either. The last time that Macy's had any volume on the way up is laying out here at $29. So retailers, I guess the real key in retailers is this right now. Are retailers not making money because we are not shopping, or are they not making money because Amazon's getting all their business, or are they not making money because our consumer habits have just changed, that we don't need as much junk? We'll find out. You know, I think my son and I, Tommy, we do a great show at 10 o'clock in the morning, 10 to 11 every day now. We were talking about this morning, and it's really a toss-up, folks. It's a toss-up as to what is going on with those retailers, and is it that we are just not shopping, you know? Let's go to Mike in Lakewood, California. Hey, Mike, what's going on?
Oh, not too much. How you doing?
I'm doing great, man. Thanks for calling. Thanks for holding.
Yeah, I'd like your take on gold and the gold miners. As I look at things now, I see that gold's down, not a lot today, but a little bit. And the market's down, again, not a lot, but a little bit. But I look at JNUG, the junior gold miners, and Nugget, which are I'll call them the regular or the bigger gold miners, and they're both up. And I have trouble trying to rationalize those three things. I can see if the market was way up, why the miners might be up, but the market isn't way up, and gold isn't way up. So I'm going to hang up and listen, but I'd like your take.
Okay. Thanks for calling, Mike. Have a great one, man. Have a safe one. So now watch. This is so cool that he called right there, because this is where I'm going with this whole conversation, folks. My take on the aspect, so picture, Walmart, first off, they had to give their workers raises. Now what is happening is that now the workers want discounts on their food. General Motors just signed a contract. They're going to pay more money. Ford just signed a contract. They're going to pay more money. Bottom line, folks, people haven't got raises for so long. Inflation is happening here. Okay. Now, that being said, the kicker comes with metals versus the dollar. Dollar goes higher, you'd expect flat out that metal's got to go lower. At $1,084 an ounce, gold, folks, is 10 tons of dirt to get out to make 1 ounce. Okay, so rationally, common sense-wise, you can make the argument that, okay, it's at production cost. But we know how markets go. Markets can go anywhere they want. Okay, so now let me show you what gold is doing. What gold has done, folks, is this. Gold is testing the lows that were generated in this July, as well as the breakout area from 2009. It's testing it with dramatically lighter volume. So the kicker here goes like this. As Mike just said, the juniors, bottom line, if you're going to buy them, yeah, I think you're buying them at the bottom of this range, but just make sure you put the stop on the other side, because guess what? It can break it. But bottom line, this is the bottom of the range. It is lighter volume. You need a rejection at a lower price. We're coming right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 29. Nasdaq's off 6. S&Ps are off 4.5. And don't forget, folks, at TFNN, we do 9 hours of live programming every Monday, Wednesday, Friday, 10 hours Tuesday, Thursday. Our man, Mr. John Logan, kicks us off every morning, 8 o'clock in the morning to 6 in the evening. You can get us right on your cell phone, tfnn.mobi. That gets you the full audio. You want to get the video? Just go to tfnn.com. You'll see on the right-hand side, watch Tiger TV. You hit that, you're off to the races. Now, John kicks us off, folks, okay? And as he kicks us off, it's an amazing show, number one. what John also has, and each and every one of you can try this right here, right now. It's the Taz Market Scanner Plus, okay? It's the Profile Scanner Plus. Tomorrow, Thursday, John's going to be doing a workshop. That's from 6 to 7 o'clock at night. He's going to walk us through how you might want to use this scanner. It saves a huge amount of time, folks. It sets up markets, and I'm talking about markets right across the world, okay? Bottom line, you can come over to our website at TFNN. You test drive the scanner. As you test drive the scanner, you get into the workshop free. John is going to walk you through it. If you did test drive the scanner before, folks, what will end up happening is that you'll pay half price for the month. That's the bottom line. So it's a great deal. Check it out. Come on over. Visit us. Absolutely listen to John's program every day. John Logan, what's going on?
Hello, Tom. Good to be back with you.
You too, man. Totally.
Man, it's I'm looking forward to tomorrow night. I hope there's going to be quite a few folks there, because I think we're going to have a good time, and also be able to teach how to use this scanner, which is hopefully going to save people a lot of time and put some high probability trades right in front of them constantly.
There's no doubt, and I'm telling you, folks, I use it every morning, man. I mean, it just, and all of us will use it in different ways, folks. But the bottom line, you'll see just how powerful this is. That it's what's amazing, John. Now I'm sure many of you have different systems. You're paying for quotes. You're doing all the above. Well, guess what? He has every quote in the world on this thing from all over the world. That in itself is a mind blower, man.
And we're paying for it, not you.
I know, man. I know, which is just amazing.
Yeah. Well, I'm showing something on the screen right now.
I'm looking at it. Yep.
So what in this version that we're going to release, and I'm going to talk about tomorrow, we're trying to make things easier and easier.
Yes.
So, we want people to have more freedom when they trade.
Right.
And also be able to find things very quickly and conserve time. So what we did and what I put together recently were some canned. If you see this, breakout, strong trending up, uptrend, uptrend reversals, balanced longs.
I can see it. Yeah.
Profit taking opportunities. So, what we've got now, and I'm just going to click on one of them. We've got breakouts. So these are stocks meeting criteria for breakouts right now. All right.
Yes.
And then when we can go back here, we've got uptrend stocks that are sitting with that trend in their favor, and not as strong as some of the stronger uptrending stocks that we've got another hotkey for. But these are ones to take a look at that could be also in consolidation periods. So we're going to teach people how to use this.
Okay.
How to find these opportunities, how to use these hotkeys to their advantage. There's a lot of cool stuff in here. And also, we've also got that kind of market barometer breadth system in here, which I just can't live without.
It's a mind blower, folks. I know.
I know. As I look at this, and if you want to talk about the S&Ps for just a second, real time here.
Sure.
We've had a mixed bag on our breadths as we look at these speed dials. These speed dials make it really easy relative to the time frame that you're trading the broad market on. If guys out there are trading S&Ps, this is very unique information that you're not going to get anywhere else.
And folks, when John's talking about the breadth, so picture this. What we're looking at right now is we're looking at 4 clocks. It has the weekly, the daily, the 240, okay, which is the 4-hour, and then a 60-minute. The correlation, just to understand how that gets, is that when we're talking about breadth, we're talking about under market profiles are over, which is different than, normally people say, oh, is it going negative or positive? Okay, it's a whole different take and an understanding about what that really means.
Right. And Tom, you're right on the money there. What we've done is basically do some calculations that are not being done anywhere else on the planet, really, using our information, the balanced states of stocks or instruments in the underlying S&P 500 versus the stocks that are in an imbalanced state, and trying to make sense of that and trying to actually create an edge. When you're trading, you always want to have some form of an edge, and a lot of things out there that are available to folks are really they're available to everybody. This is something that we feel really gives you an edge in a unique way, and you can hopefully block out one side of the marketplace. We always talk about that, Tom.
Right.
You want to try to figure out when to be long, when to be short only. And is it okay to be long, not okay to be short, or okay to be short, not okay to be long?
Yes.
I think that this crystallizes that concept on the different time frames you're trading. Now, what I referred to earlier is we kind of got a little bit of a mixed bag in here, and this is so interesting the way this works out. The weeklies, our long-term weekly breadth, which is an insane portfolio management crossover system.
Right.
For guys who are just looking to either hedge their portfolio or go to cash, this will tell you when that is appropriate, period. Enough said. But when we're looking at our lower term time frames, so right now when I say we got a mixed bag, our daily intermediate time frames a little mixed, I'm going to go to my S&Ps and lo and behold, we're in a trading range right now.
Yeah.
On our S&Ps, and we talked about this morning. It's like, okay, we've got 2086, 2087 as kind of like a little bit of a resistance here, and that was predicated on some of the numbers that you can drill down in the scanner and find
sure
easily. But right now, we're a little mixed up. I'm not a huge bull right now. I'm not a huge bear, but I'm waiting for this price to get into these inflection points where it's going to tell me where I can put a high risk reward trade on, put my stops, and also look at the market, internals. If I'm trading Apple, Disney, the underlying instruments, the S&P, I want to know the tide of the marketplace. So this is going to give me that tide, and then I can act accordingly on my underlying instruments.
And folks, it's amazing here, and I know you know this, John, because it's your baby. But if you go back into the CME, folks, okay, and you remember when I used to have Ed Young on, God bless his soul. The bottom line is that the way this used to be done was cards. Everyone would have cards in the pit. And the way that the S&P is trading out here, John, today, right? It's trading just like the cards, man. You got 19 points on each side, folks, okay? And everyone wanted to always know, what are the profiles? And when this first came out, this is probably out 20, 25 years, right? Maybe,
right.
Yeah.
No, maybe more, actually.
Is it more than that? Okay.
Well, the 80s were 30 years ago, Tom.
Oh, my God. That's sad.
If you can get your arms around
that's sick.
that.
How is that when I'm only 35?
That's where I'm coming from.
But understanding that, folks, is really cool because they bounce off these numbers until they break them, which they will break them, by the way, either up or down. And then what ends up happening is that you go to another profile. But what John has done, folks, hey, John, you just stay right there, okay?
I'm not going anywhere.
That's a beautiful thing, brother. John Logan, Tom O'Brien, folks, we're going to be coming right back. Dow Industrials right now down 46, Nasdaq's off 12, S&Ps are down 7. And the break, folks, you can come right over to our website, right in the very front page, sign up for John's webinar right here, right now. Come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. We're talking with our man, Mr. John Logan, and we're talking about the TAS Profile Scanner Plus. John's great piece of software. And you can come over right now at TFNN, folks. You'll see it right on the front page. You can hit it. You can test drive it. You're going to be in the workshop tomorrow night. That workshop is going to go from 6 to 7 p.m. Eastern Standard Time. Now, if you can't make the workshop, don't worry about it. It'll be on your page for an additional 30 days that you can go over it as many times as you want. So, I'm looking at uptrend reversals. Oh, my bear claws.
Exactly. We put this filter in specific. We should call it
For
the
me?
Tom. Yeah, we should call it the Tom O'Brien filter.
Perfect.
But anyway,
Perfect.
Hey, well, people, I like to catch things. Obviously you do too. We like to catch things as they're just starting to kind of crest or crater and turn around. Those are some, just like the XLE stocks, like back when crude oil had a little bounce. Those things bounce like 20, 30, 40%.
They do.
In a matter of weeks. I mean, it was insane. So when things are kind of spring loaded like that from a big move, one way or the other, first of all, you want to have confirmation that things are actually changing.
Yes.
And that this gives it to you either way. And then you also want to know, well, where do I call it quits if I'm wrong? And
right.
You can orient those types of concepts around some of the features in here. So what I did for this, Tom, the Tom O'Brien, the filter here,
I like it.
We wanted to see, like, okay, what's either having a new profile appearing on our long term, which means that we're going to at least have some kind of resting period, more than likely, on the long term, or stocks that are just significantly starting to break thresholds on the next time frame down.
Right.
All right. So, and I'm going to go through this in detail when it comes to tomorrow night's webinar.
Nice.
But if you don't like some of the preset filters that we have here, we've got uptrend consolidation, custom filters, profit taking. If you got a stock on this list,
yes,
you may need to think about looking at it in a hard way. Yeah. But and there's a lot of stocks on these filters because this is the S&P 500. But as I look at this, if you don't like some of the filters we have, you can create your own.
Tom, listen, I do it every morning. I know.
Well, Tom, you haven't even seen this version that we're going to release to everybody tomorrow. You can come in here and just basically click on the color scheme that you want to see. Boom, boom. Oh, wait, let me get out of here. Let me get back to my dashboard.
And what happens, folks, which is so cool, is that what you're doing is that, so picture, you're looking, every trader is looking for something different, okay? But depending what you're looking for, folks, on what time frame, meaning, are you looking for it on the daily, on the 240, on the weekly? When you put those together, it's just giving you a huge amount of information. But guess what? It's consolidated information, and it's a buy or sell. End of story. And that's the difference, I think, in the side of the system, John, which is amazing. Because okay, here it is, and if it goes over that line, guess what? You're wrong. Big deal. Right?
Exactly. And you know, if people that watch the show every morning, I mean, I unfortunately, I kind of stick with some usual suspects at the beginning part of the show. Then we talk about some stocks and maybe some things on the scanner. I feel like, in the pre-market, there's some glaring things you want to be aware of, in my opinion.
There
some
are.
of the current currencies, the golds. So we kind of run through that, probably not as quickly as I should every day. But, you know, the concept that we're talking about is kind of case in point what I just said. It's portable across all instruments. And, you know, we put a big focus on some of those usual suspects in the morning to try to figure out, you know, what's the tone of the broad market for the day. And then we can go in and use that same concept and that, you know, portable, you know, set of rules again for some of these underlying instruments like the Johnson & Johnsons of the world, the IBMs of the world. And, you know, I mean, IBM, I mean, you know, people are like, is it on sale? And we've been just pounding the desk to kill that thing.
And well, it's amazing, too, because, you know, they take rest in between it. But the bottom line, folks, is that, you know, IBM is trading at 134. And guess what? It was a $210 stock, you know.
And you know what? It could get cut in half again.
Oh, listen, my take is it's gonna. You know what's really wild, John, is that, so check this out, folks, okay? So as I'm doing this, what I happen to like to do, and you might have heard this before, I do, I'm looking for below the box on a 4-hour and, you know, a 200 on a daily. That's what I'm looking for. I want the rest of them above the boxes. And what pops up the other day, and I love how your new system is going here because I can see how easy it's going to be to do. And what popped up was Colgate, right? And I'm saying to myself, and you got to see this chart, folks, okay? Because what's really wild about it is that these are the ones that, you know, I happen to like. I mean, I want some things at wicked highs or wicked lows. It's,
right.
You know, and what that's all about, and the mantra in the marketplace is that, oh, you can't get things at highs and get at lows. All you have to do, folks, is put stops in. That's the bottom line, okay? Because if they break high, they break high. But guess what? When they break lower at highs, forget it, man.
Well, you know, the game you're playing is again, that's a very profitable game. It's, you know, you just, like you said, the risk reward scenario is what you're looking for.
Yeah.
You've got a huge reward scenario on situations like that, but you just got to kind of put the stop in.
You do, because when they break, they break. And sure enough, you know, I'm looking at Colgate. I'm saying to myself, man, how Colgate's going to break? Now, I didn't do this one, okay? But sure enough, it broke. It broke, and I'm going to get it now because see what happens is this. So watch, folks. It hits a high of 69 at 3.5 million. It comes off the high with 7.4, right? It bounces again with 3.2, comes back down again with 5.2. That identification is like heaven to me. Do you know what I mean? Now, it's, you know, so it's like, okay, man, now this thing wants the lower price. And, of course, it's not that far off the high, which is dynamite, you know? So
let's look at CL, because this is kind of one on a little bit of a radar screen for me.
Yeah.
Okay. Yeah, I mean,
I got your screen now. Yep.
Yeah, this one, I mean, 69.30. Like, there's
Isn't that crazy?
Yeah, there's the inflection point. There's the big retracement, and there is that. Wow, 69.30 as I mouse over the cell.
I know, man.
You know, it's just. I don't know, man.
So here, let me just clarify this again, folks, because I know we're talking fast. What was so wild about this one, like some of these, okay, in any type of system, they've already been down and they're up, okay. And I kept looking at this, John, and saying, look at this. This is right at the highs when it hit it. It's like, oh, my. So what that has said is that there has been underlying selling in that equity because that profile couldn't have set up.
Right.
You know, which is just so cool.
This is a big, wide profile. I'm looking at it.
It is. It is, man.
So when you have those wide profiles, this is another thing we'll talk about in the webinar. There's some esoteric little innuendos that are not tricks or anything, but just, you know, kind of seen that movie so many times, we've got to almost put this in a rule. When you got wide profiles, you're obviously going to have volatility, but the chances of going long, in this case, outside of a very wide profile like that are very, very low. And we based, you know, our automated systems on probabilities like that. So when we look at situations like this, and you look at Colgate and you say, oh, a couple of weeks ago, God, wide profile, traveled the entire fair auction.
Yeah.
Probably need to take a shot here. On
Has
the
a
short
high
side.
volume swing low, which I liked. Do you know what I mean? That's what I'm looking at. Unreal.
Yeah.
Hey, listen, man, we look forward to the show tomorrow morning. We look forward to the workshop tomorrow night. We're going to be out here growling and prowling with you.
Looking forward to it, man.
Thanks, brother.
All right, man.
And hey, you got to get down here, man. You got to get down to Clearwater, man. It's gorgeous today, John. It's like 76 degrees out, man.
I'm coming.
Cooking, brother. Okay, man.
Right. Yeah.
Talk to you tomorrow. Come over to our website, folks. You can sign up right here, right now. You see it right on the carousel. You stay right there. We're going to be coming back with Mark from Denver, Colorado. We're going to be talking the dollar, folks, the dollar. Tim Cook just said, guess what? The next generation's not even going to know what money is. We'll see about that, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's down to 43, Nasdaq's off 10, S&P's off 6.5. Let's go to Mark in Denver. Hey, Mark, how you doing, man?
Good, how are you?
Awesome, man. Thanks for holding. Appreciate it.
Hey, I was looking at the
UUP.
you were talking about gold earlier. I looked at the UUP, and the volume is off the charts today. And I was just wondering, I don't get the volumes on the actual dollar contract. I was wondering if there's any.
Oh, that's so cool.
synergy.
So check this out, folks. Okay, now this is pretty intense. Okay, so the UUP, folks, is the Power Shares Dollar Index Bullish Fund. Now, if we go over to the dollar, the bottom line is that dollar was on an ABC structure on the way up with a 1.00 price projection, and we did 99.60. And it was so wild, Mark, when I saw that you're coming across with the UUP, as John was on, I was looking at this morning, and I'm saying to myself, man, hold it. The UUP yesterday hit a high with 0 volume, okay? And it's like, okay, man, is the dollar done? And, it's like, okay, man, even though the dollar is a 1-to-1, what it can do, folks, is that it can go much higher than a 1-to-1. I like what's happening in this, though, man. This is an indication. It's like, okay, who just sold the dollar? Someone sold the dollar, folks. This is extraordinary. This is like insane.
Yeah, and it tested 2 days ago. It was 25.74 2 days ago with 2 million, and it tested that today with 12.26 million, but it didn't break it. So it's kind of interesting. And
this is intense, man. This is so. Watch what this is, folks. This is what's cool about ETFs. What happens on ETFs, folks, is that you can buy and sell just about as many of them as you want because they create them or destroy them. Okay. Well, guess what? Someone came in. They didn't buy 12 million shares today. Okay. Yesterday, this was at 25.91. You're at 25.77. Oh, hold it. I can do it this way. Let me find that trade.
And while you're looking, look 2 days ago at the UDN.
This is not stopping, man. Someone is. Okay. So check this out, folks. What time is it? Every 5 minutes, someone's selling 40 to 50 or 60,000 of these.
Yeah, and look 2 days ago at the UDN, which is the opposite.
Yep.
And it had the same volume 2 days ago, as far as just it was 1 million, and it normally trades like 50 or 60,000. So it's interesting. It's like counter.
Yeah.
That was weird, and today's weird.
Okay.
But the other days makes a little more. I don't know.
Someone's got a big position. So watch now. That would totally make sense, too. So this is what ends up happening, folks. If you went in, I trade the dollar index. Now, the dollar index is a nice trading vehicle, but guess what? That's a trading vehicle. You want to buy 4 or 5 contracts, 5 contracts, that's great. They only do 27,000 a day. Someone that just did the UUP, they can't trade the dollar index. They'll blow this thing all over the place. Do you know what I mean?
Right.
Oh, this is a big number, man. Okay, so... Hey, bottom line, we got to watch what's going on with the metals market tomorrow, man. Tomorrow, the next day, because it looks to me like someone shot in a big way inside that dollar, man. So We'll see where it shakes and bakes. Cooking, brother.
All right. Thanks.
Have a great one, man. Thanks for the call. Really appreciate it. If you go over to Apple, folks, this was a quote. This morning it was funny. Tommy and I were talking about that. I actually said to him, I said, years from now, we were talking about gold, and people don't use gold anymore. I says, yeah, years from now, people won't use cash. It was pretty wild. Tim Cook came out today, and that's exactly what he was saying. He thinks everyone's going to use their Apple Pay. Bottom line is that he was saying the next generation will not know what cash is. The bottom line, folks, and that may be possible. Guess what? The bottom line is that if you're bringing children up at this point, make sure they know what their constitutional rights are. Those are the things that bureaucracies are losing, and guess what? You don't have to lose them. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks. Visualize it, step into it, take ownership of it, and fly with it. Have a great day. Have a safe day. Happy Veterans Day. Send a lot of great white light out to the folks who didn't make it. Wow! Go get them, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.